Okay, welcome back everybody for another TA stream. I'm Qui-Gon Jinn. I'm just doing a solo video tonight. Just wanted to give you a quick update on Bitcoin. I cleaned up my chart a little bit. I apologize for the messy chart yesterday. I also apologize for the poor sound quality in the previous videos. Hopefully I've gotten that sorted out, and this is going to be another test run. So now just to quickly reiterate, we do have a descending channel forming on Bitcoin. We met this resistance zone up here. We did form a rising wedge pattern, which is a bearish pattern, which we did break down from. We discussed some price targets yesterday around the 55 to 60K area. It looks like Bitcoin did end up having a sell-off down to a low of 60,473. Again, this is Binance versus Tether perpetual futures contracts. Now, we did make it down as low as 60,500. It looks as though what we have here on the new daily is a bullish hammer so far. Now, the candle is pretty early. It's pretty early to say. The candle's still young. Still has a whole 20 hours left. But one bullish point is that the previous daily candle that closed did close just slightly above the 200 daily SMA. It wicked down below it briefly and then closed back above it. And this new daily candle, which has been open for about 4 hours now, looked like it briefly wicked below the 200 daily SMA down to that 61K or 60,500 area. And since then, we have had a decent bounce and have bought back above it, which I guess you could perceive as at least a short-term bullish signal. That is somewhat a signal of strength. However, you do have this 50 daily SMA approaching right around this previous 0.5 area. And this 0.5 area, again, is a fib level that was drawn from this peak over here on June 7th down to this low here on July 5th. So those have proven to be some pretty significant levels. It was resistance here, support here, is now flipped back into resistance. Now, we did mention that I had mentioned that this candle was looking pretty impressive and that we would have to see if it followed up with a second bullish candle following up with that, and we might be able to see some of these higher price targets. However, we did not follow it up with any bullish momentum. It looks more like it was a liquidity sweep or liquidation event before a continued sell-off. Now, this is clearly a bearish engulfing candle. However, like I mentioned, it did hold above the 200 daily SMA, and it also held above this yellow line here, which if we switch to the monthly, just to reiterate that, this was the highest monthly candle body close that we had back in October of 2021. Now, if we're looking at some more immediate levels to where Bitcoin could return to, just based off this daily here, if this daily does close as a bullish hammer, I would say that there's a good chance that the price could at least get back up to this red line here, and possibly slightly above the 50 daily SMA, which I mentioned was fast approaching. But again, this is a level of support that was lost. You sold off through this level of support. And to reiterate real quick, again, why that level has significance is it was actually, if you go to the 2-week chart, the 2-week candle body, the highest 2-week candle body close in October 2021 was this 63,300 level approximately. So in a nutshell, you did come down to this sort of area of value that we mentioned. It appears as though the price is trying to hold above it, at least in the short term. If we are looking for a bounce here, I would suggest that you be modest with your targets. You might be able to get up as high as this 63.3 area before seeing potentially another rejection in this area, you know, between 63,300 and 63,680. If we do get a push higher, there's a chance that you could get up to this previous 618 level at 64,950, which let's just call it 65K, which is also this pink line here is also the anchored VWAP from the all-time high. So if we just want to, now that we've recapped how the daily closed and how this current daily is going, I would like to mention that this 4-hour candle that has just recently closed about 20 minutes ago, this is a bullish hammer. That is also a bullish reversal pattern. I think that it is more likely that we are towards the bottom of the trend or getting closer to the bottom of the trend. It's clear that there is buy pressure showing up down here. We do have the MACD attempting to try to, you attempted a bullish cross here and it ended up failing. So one bullish signal that you would want to see on the MACD is seeing this signal line cross above this blue line cross above the orange line. That would be the first bullish signal. We don't quite have that yet. The RSI here, which we are on the 4-hour, I did want to point this out quick. There being a higher low in the RSI. The RSI did get oversold on the 4-hour and was oversold through this whole area in the chart before this bounce. But what I'm trying to point out here is that you do have this bullish divergence potentially forming on the 4-hour chart. If this is indeed a higher low in the RSI, you have a lower low in price and a higher low in the RSI. That is bullish divergence, technically on the 4-hour, assuming we do hold above this level with the RSI, which still remains to be seen. Now, another level that we discussed in our previous video was right around this 60K area. And you have quite a few levels here to take note of. The first thing being that it was a previous support area and then turned into a resistance area before making a temporary resistance again and then breaking through it. So if we were to return back to that level, there is a good chance that we could bounce from it. This 60K is also a nice round psychological number. I've seen a few other analysts mention how that could be an area of value. And on top of that, you do have this fib that I have drawn, this 618 level that I have drawn here, this dotted line, this dotted green line. That's at 59,830. And that is a fib that I drew from this pivot point down to this low. I'm just going to get rid of this rising wedge pattern so that it's out of the way. Now, on top of this fib level drawn from this peak down to this low, that is a 618 level there. However, what it also is if you draw a fib from this low down here to this high, you also have a 618 retracement sitting right at 59,728. So I think it's safe to say that anywhere between 59,700 and 60K is probably a level that you would want to watch out for. If we actually zoom out a bit further, you can see that it also is, if you draw a fib from the very bottom of the bear market lows to our all-time high, our current all-time high, you can see that that's also this dotted red line is a 0.236 retracement level, fib retracement level, and that's at $60,071. So there's really multiple different confluences sitting there. It probably would not be the best thing for us to sell off below the 200 daily SMA, but you did do it here before, and you ended up getting a bounce, and you did have this bullish divergence forming on the daily, which is something that I mentioned in the video from yesterday as well. You ended up having this bullish divergence form, which I believe was partially responsible for this move up. So, having said that, if we were to drop below the 200 daily SMA, I don't think it would be the end of the world. You probably want to have the least amount of closes below it as possible, but I don't think it's the end of the world. If you're looking for a short-term bounce in some more immediate levels, I think a safer bet would be to be modest and say that 63,300 could be a first level to take profit if you were in a long, and that 65K level, could be a bit of an overshot if it doesn't get rejected. If it doesn't get rejected here, if you were to take a long position, for example, I would say this should be your first target. It might reject there. If you were to get above it, I'd say this should probably be your second target. If you were to take partial profit on a position here, you could always move your stop loss to that point. And otherwise, if you were to theoretically take a long position immediately here, I would say this previous low or just below here might be a decent stop loss. But however, if you believe that the price could reach down to the 60K level, it might be beneficial to wait. If you are more on the bullish side and you're looking for a more immediate reversal, I would say that this would be your first area of take profit before you start to find resistance. Also, that being the 50 daily SMA that you have lost already. If you were to take partial profit on a position here, you can move your stop loss up to there. And if you leave half of your position to run, you could just trail your stop loss up with the price as the price rises. So that's a sort of just a theoretical idea, or an idea on a theoretical trade. I try not to make calls here because the channel is really more so supposed to be about basic technical analysis, teaching technical analysis, my interpretation of what I think is happening with the charts. And so far what I see is we still are in a downtrend. It would take a lot to prove that we're not. The first thing would be essentially flipping this 65K area, and then you have a better chance to travel back towards the top of the range. And I've said repeatedly that I think that this could be a significant top for weeks, potentially even a couple months. You do have this 0.5 retracement level here that we could potentially hold. If we do hold above this 61,700, that would be a pretty strong bullish sign where we could continue up to the top of the range and potentially break out next time. If not, that 60K level is really probably your last saving grace before you end up traveling further down to the bottom of this channel, this descending channel once again. And if you look, we do have this structure here, and we do have, if you look on the weekly, which this is something that Strings mentioned in the video yesterday, the 50 weekly SMA is actually approaching this level here. That currently sits at 50,137. However, if it does take the price a bit longer to reach it, you could see this 50 moving average creep up a little closer to this area. You do have this structure here, as I mentioned, and drawing a fib from the bear market low to our recent all-time high. That would be a 382 retracement at approximately $51,500. So I am personally looking for lower targets. If you were able to get a short-term bounce, I would be modest with the targets from here, considering, like I said, again, that we are still essentially in a downtrend and have been in a downtrend since the end of July. One bullish thing. So you do have that RSI divergence. You have that bullish divergence in the RSI on the 4-hour. Another thing is that on the 1-hour, you did get relatively oversold. If you're looking for some more immediate short-term price action, I'd say the first bullish sign would be this bullish cross on the MACD on the 1-hour, which is typically a pretty lagging indicator. However, I tend to find that it lags less and less. With the smaller the chart time frames you go, the less it lags. So it's going to lag a lot more on the weekly, which right now you can see is still heading down. You didn't actually get that bearish cross until, after you were much further down in price, actually closer towards the bottom of the range. So you can see how much it lags on the weekly and lags a little bit less on the daily. However, look on the daily, you have this bearish cross here. So it's showing that there is still some momentum to the downside, despite the fact that the price is fighting to stay above the 200 daily SMA, as well as this monthly support resistance zone where we have been building some pretty decent structure. So this structure may be temporarily threatened, or it could act as an area of pretty good support, and we could go for a breakout sooner. However, for me, I'm staying modest with my targets. I still am more inclined to believe that we have further downside to go over the next coming weeks and or months. I could be wrong about that, but this could potentially, if you are further on the bullish side, these could be potentially good buying prices, especially if you're looking at altcoins. Considering altcoins have been, rather devastated, and whenever Bitcoin drops, the altcoins just tend to take even bigger nosedives. So, like I said, 60K area, definitely keep an eye on that. It was support, and then resistance could end up flipping into support again. If not, more likely that you're going to visit the bottom of the range. I'm going to try to stay away from the shorter term price action as much as possible. However, I did want to mention there does seem to be a decent bounce, but again, probably stay modest with your price targets. You have this 50 SMA on the 1-hour that is traveling pretty well in line with this pretty crude trend line that I have drawn. So just a few things to keep an eye on. One more thing that I wanted to mention, which this is something that I mentioned in the video from yesterday, was this could potentially end up turning into an evening star pattern, which is a bearish reversal pattern. So this weekly candle, which I will do an update for this candle on Sunday when the weekly candle closes. It's pretty likely that I'll end up trying to put out an update for that. You do still have almost 2 days left in this candle. However, this is a bearish pattern, and if this weekly candle closes like this, or even potentially any lower, it's going to end up forming that bearish evening star pattern, and that just further increases the chances and probability that we are likely to travel to the bottom side of this descending channel, as well as the 50 weekly SMA. So that's what I have on Bitcoin. Also keep in mind the daily 50 and 200 SMA may potentially have a death cross, which would also be a yet another bearish signal. So just some things to keep an eye on and keep in mind. I also wanted to mention just real quick this the S&P 500, the US 500. So more or less a shit show over the last couple days, especially. We did have, as I mentioned before, if I zoom out to the weekly, it might be easier to see on the weekly. Just to quickly reiterate, I had this, hang on a second, I just want to hide this real quick so that it's not in the way. Sorry about that. We did have when you draw a fib from peak to trough, this major high to this major low in the bear market, you do have a 1.618 extension at around 5,640. So let's just say it's about 5,600. You did fail to close any weekly candle bodies above that. Since then, you've been in essentially a downtrend on the S&P for the last 3 weeks. I was hesitant, but thinking about potentially calling this what's called a 3 black crows pattern. However, I don't think that would be an appropriate classification, given the fact that this candle is not of relative equal size to either of these two. Yeah, I'm not sure if the size is similar enough. And the same could be said about this this pattern here. I'm not sure I would really call this a 3 black crows pattern, given the fact that this candle is smaller than this one, and this candle is also smaller than this one. So the relative size of them, I don't think is quite similar enough. Now, a 3 black crows pattern is a bearish reversal pattern, which would support the theory that this 5,600 level could be a significant top. But I'm not willing to submit to the idea that that was a major top and a major pivot zone where we are going to then more or less collapse into a prolonged bear market. I'm still on the macro bullish side. Another reason why I feel that I should remain macro bullish is because, firstly, if you do draw a fib from this low that we had back in October of 2023, and you draw it up to the recent local top that we just had, a 236 retracement would be around 5,300, which was a potential target that we mentioned in yesterday's video when we were still, I think we were still well above 5,400. But that was a full day's worth of price action that sort of took out that level at that point. So some bearish signals is that you did lose the 50-day SMA. If we zoom down lower from the daily to the 4-hour, you could see a little bit more clear the intraday price action where you did temporarily find support here. You could I wouldn't say this is a double bottom because it doesn't necessarily meet the criteria given this more recent price action. But if you did have a bounce here, and some could call this a double bottom, you did break this descending line of resistance. However, you did get rejected there, which was the bottom of this trend line that has been staying above for a while. So just to reiterate that, after that rejection, which did end up being pretty severe, you sold off back below that line, and you also lost this level of support around 5,400, which was the level that we mentioned previously. So losing that 5,400 support, I'd say that the bears are more so in control of this chart until you are able to get back above that 5,400. Then the next level I would watch out for is really like that 5,500 before we can continue to make a big move up. I think I had mentioned in the previous video that during these times, like especially a presidential election year, the price tends to get pretty volatile in the months before the election. The price tends to get volatile. Another thing that's worth mentioning is that we may possibly get interest rate cuts in September. Not a certainty, but strong probability in most people's eyes at the moment. So another pretty bullish thing to mention would be that if you're looking at the 4-hour chart, the RSI is at an oversold level below 30. You also have this stochastic RSI, which is more or less bottomed out, and you do have a bullish cross in that. If we're able to pick back up some momentum and get the stochastic RSI back above 20 after having a bullish cross, that would be another bullish sign. You would also want to see this MACD flipping back up and these histogram bars turning lighter red, like sort of whitish color, and you would want to see a bullish cross there. Like I mentioned, the MACD is a pretty lagging indicator. If we move down to the 1 hour, you can see that it is working on a bullish cross. You attempted one here and it failed, so it's working on another one there. But you may end up losing momentum sooner rather than later. The thing that I think is really worth pointing out here is you have the bull market support bands here. This is the 20-week SMA. A lot of big-time traders, they do see the 20-week SMA as being a more or less a mean reversion for price. So if you were looking for a correction up here, you could say that this ended up being mean reversion, whereas the price did hit the 20-week SMA. A lot of stocks have fallen quite a bit in value. Even the Magnificent Seven have been having a pullback lately. But this could potentially be a signal where we are coming to the end of this particular correction on the S&P 500. Not to say that if we bounce here, if we did bounce here, we may end up visiting similar prices further along down the road. But for now, it is good to take note that you did close this weekly candle above the 20-week SMA. And when we did it when we did have our last bigger correction in the US500 here, shown from, April 1st basically to April 15th, you can see that the price did return back to the 20-week SMA before bouncing, and you did have this larger move up following that. So could this be the same type of thing here, where we come down to the 20-week SMA and we bounce from it? I'm not sure. I think there's a good chance. It definitely is a good sign that we did close above the 20-week SMA. It was also brought to my attention today that we did have some conflict that was mentioned. I wouldn't want to get too deep into it, but there is some conflict and some tensions that are rising, which also could have had somewhat of an effect on the price, as well as it being Friday, which typically is more or less the day people would want to sell off, get out of the market for the weekend, and then reassess the following week. It was also not the end, basically the end of the month, beginning of a new month. You could see some turbulence there, and then along with that, a few of the other reasons why I mentioned the price could potentially be reacting that way. Now, if you were to lose this level, I would definitely keep an eye on this 5,200 level. And that, I think it would be probably pretty unlikely for us to lose that 5,200 level. If you did, I would say more or less the bears have really well and truly taken control of this chart. The last saving grace would be this 382 retracement level, which is actually conveniently sitting pretty close to this yellow line, which is an anchored VWAP from the low that was printed in October of 2023. So you have this anchored VWAP here. That could play a big role if the price was to get this low. You also have the 200 daily SMA approaching that level, as well as the 382 fib retracement level at 5,071, which let's just call it 5,000. So I would definitely keep an eye on this level here, where we're at this 5,300 level that we did mention before, 20-week SMA. Lose that, I'd say 5,200 could be your next stop. If you do somehow lose 5,200 and reject from it, say your last saving grace is that 5,071 area. So that's pretty much the S&P in a nutshell. If I just check again these lower time frames, the 4 hour, another thing that I wanted to just point out again, that stochastic flip that could end up turning into something bigger if you're looking for a bounce from this level and are bullish from this level. If you zoom in a little further to the 1 hour time frame, like I said, you could be losing momentum here in the stochastic RSI. However, you do seem to be picking up momentum in the MACD. And you are still above the 20-week SMA. So those are some bullish points to keep in mind. try not to get too fearful when these type of things happen. I know that you can see your portfolio fluctuate quite a bit, especially if you have a lot invested, whether it be stocks, whether it be crypto. You could be holding some really low market cap stocks that are suffering and taking a beating at this point. You could be holding some altcoins, some riskier altcoins, some lower market cap altcoins that are really taking beating at this point. But I am really I'm under the assumption that it won't be too much longer. Even if we do see a more severe correction in Bitcoin, it really won't be too much longer before we start to pick back up to the upside. And I think it might just take a little bit more time, like, possibly another couple months. But we're really not far now. So if you've stuck it out this long, if you have been in financial markets for the last year or two or even 3, and especially crypto, which has been a very difficult market and stressful market to be trading lately. If you've been in this long, hold on a bit longer, because I really truly feel that we're going to be picking back up again sooner than you might think. Summertime is not an easy time to be trading financial markets, that's for sure. So I am going to go ahead and wrap it up there. I hope that what I said was helpful. I hope that it didn't go on too long. I hope the sound quality was much better this time. If you do like the content, I would really appreciate it if you could hit the like button and also subscribe if you have not already. Also, if you'd like to leave a comment, that would be greatly appreciated as well. With any sort of comments, whether they be compliments, criticisms, critiques, anything. I like to get feedback. It helps. So again, would really appreciate it if you would like and subscribe. And I will try to keep you up to date with some more frequent videos. I'm going to do my best to release some more videos more frequently. Try to give you some detailed and thorough analysis while still trying to get straight to the point. So again, hope you enjoyed the content, and I hope you have a great night. Thanks.